Hello, this is Cryptolyze. I hope you are well on this Tuesday, 14 November 2023. We're meeting today to talk about BTC, to talk about crypto. We have lots of things to see, and we'll start right away. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training worth €400, which allows you to learn blockchain, crypto, investment, analysis technique, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. We will start with the news regarding the XRP ETF. So above all, don't rush to buy XRP because it's fake news once again. We again had a magnificent manipulation in which we had the course which made plus 10, minus 10 directly in a few minutes. So here we are really, once again, in the ETF narrative. So obviously we are going to have lots of manipulations of this style. We take a step back, we already validate the two main ETFs which are BTC and Ethereum, and then we will see about the others. So speaking of ETFs, there is a very nice paper that was written by Cryptolyze, which explains a little bit about JP Morgan's vision and JP Morgan's analyses. So on this, we are always very careful at the level of JP Morgan. We always have something to drink and eat about it. But what is interesting is that they come back to the two elements which determine why ETFs will play a role important in the evolution of BTC. We have on the one hand that the crypto community expects ETFs to attract a wave of new capital, which is rather consistent when we look at the principle of an ETF. And then the second is the approval of ETFs would in fact be the crucial element to encourage, in any case, relaxation of the SEC on the notion of cryptos. So on this, the JP Morgan analysts who spoke actually come back to these two scenarios. The first, they explain that yes, in fact, an ETF is a financial element, which can encourage capital inflows. But alongside that, there must be investments, there must be an allocation to risk. And to have an allocation to the risk of institutional differences, there must be a macroeconomic scenario that allows this allocation to risk. Second point, which is the approval of ETFs, would act on the SEC. On this, they question the fact that the SEC can be directly influenced on the fact of being yes or not pro crypto, or in any case, lighten the regulations and actions against crypto because there is an ETF. On that, they really question this part. In any case, it is a vision which also allows us to not make false words and to be able to take a little step back with counter-arguments on ETFs. Once again, it is JP Morgan, so we pay attention to the different manipulations as per usual. We're moving forward and we're going to talk about the ERC 4337. So what is 4337 and an ERC? It was an update of Ethereum which allowed, at least in any case, the advent of smart accounts. So smart accounts, we talk about it a lot. It's the notion of account abstraction. We've already talked about it in the various daily newspapers, especially when it was launched. And the question we ask ourselves is it used? We see that not at all. It is very little used. It is decreasing little by little. And so, the ideology of having an Ethereum account which allows you to do without your seed phrase, which allows you to have programmability to instantiate, does not appeal anymore. So on this, I don't necessarily play this analysis because what is explained is the use. Okay, except that, once again, we don't have huge products that allow us to instantiate this in a wallet. We have a few products that are starting to work on it, but it's really very, very far away. And so, for me, we have to wait to have products that allow for mass adoption. If this is not the case, unfortunately, it will take much longer than expected. But in any case, having this part of Smart Account is important for evolution, for mass adoption, because it allows us to lay a foundation to be able to build products that will promote mass adoption. Next in the news, we have Aave launching Glen's V2 on Polygon, which is quite positive on Polygon, and also for Glen's V2. Glen's V2, which is a protocol which allows us to build totally decentralized social media, which work very, very well, which is currently somewhat spearheaded by AAV. AAV, which has a large decentralized finance protocol, which is trying to diversify into quite a few sectors in Web3, which is rather positive for the platform, in itself and its token. At the macro level, Today we are waiting for 1430, the CPI. This is really the crucial moment that we are going to wait for, and that the market is waiting for. We also see it very clearly at the level of the S&P 500. We have a candle in which I told you that starting in the red we were certainly going to end in the green. Well, it turned out to be a candle totally of indecision. And there we find ourselves in a start without volatility, because we are simply preparing the news and the announcement of the IPC, which is rather classic. We are indeed on this big resistance. See if we consolidate below or above. There we are rather in a form of consolidation below, following the IPC. And I think in the 2 days that follow, and therefore the weekly closing, we will have our answer on this invalidation zone or this validation zone. In terms of oil, we also have a continuity of the reaction that we expected. So, for the moment, we are rather in something classic. And at the level of BTC, what is interesting to see is that we are returning to a process of decreasing volatility over 24 hours. I present it weekly. This allows you to, in fact, have the representation, the average of what happened weekly every day, to see precisely the volatility. And we see that we are still very, very low. We cannot manage to get going again. There are the acceleration curves. The peaks that we have are the days of acceleration, but we cannot capitalize. Above, when we look at a bull run, in this case, we see that the wicks are much higher. And above all, we see that the body of the candles is also much higher. This implies that the volatility is maintained throughout the week. And this is something that we will have to monitor when we arrive at candles which will be full even without necessarily being very impulsive. It will be rather positive. It means that the movement is built, and that as a result we will not has no sagging of lateralization. In any case, we don't have lateralization, so we don't have a drop in volatility, sorry. And when we look at the price of BTC, we start to have a small inflection here, which is rather classic. If we take a little step back from the analysis that we had already done on the fact that it still very much resembled what we had there, we are indeed in a process of upward acceleration here. And the question we are going to ask ourselves is whether, here, this lateralization zone which ended with a bullish acceleration, we are in the process of taking this approach, that is to say, a bearish breakout in which afterwards we will retest the lower parts. Lower part which would, in addition, be the representation, if we return here, of something which is rather coherent. That is to say that we tried to liquidate it here, to liquidate it there, to liquidate it there. We still haven't broken significant lows, even if we made a break here. But that's a lateralization break, so it's rather classic. There we'll have to see if we break the 35,800. If we break the 35,800, I think we can go here and retest the 35,000 quite quickly, in which we have the whole lateralization part which is here, which is in fact a very big support, which is a very big resistance, which becomes a very, very big support. Either we will look for full liquidity, and so at this moment we will look for all that and we will break the 34 to potentially go up to 33,200. And there we will ask ourselves the question, okay, of an accumulation to start again, which would be the representation of what we have already had here. All right, we call back here and here. Same, we have a pattern of lateralization, acceleration, lateralization, which ensures a retest of the bottom of the first lateralization to then either a stronger breathing or an acceleration here. All right? So we actually have these patterns which are very present in BTC and in which we are used to working. So we must actually prepare for these eventualities, and above all, not make false statements about an acceleration or precisely be desperate about a deceleration and a BTC breakout. Above all, you have to be prepared in the areas of intervention. Personally, I am monitoring that, in which in fact we can look lower and look for liquidity zones which will also be very interesting entry points for strengthening positions. Besides, in terms of the heat map liquidation, we do have a liquidity gain here in the 36,400, which is rather coherent. What we determined last time, we are well in the process of strengthening the shorts. We can clearly see here the liquidation of the shorts, which is around 37,500. This is why I am keeping in mind the possibility of having one more last relatively strong bullish phase in which we would seek liquidity at this level. In fact, the shorts are here. So there we really have a big pulse of liquidity, which would be a bit like what we have already experienced in these bullish accelerations in which we are in fact creating a pattern of this style here. We are going to retest the lower part and then accelerate upwards again. Very short term, we have already experienced this on 1A. So we keep this probability in mind as long as we have not broken lower in any case. For me, the lowest is 35,870. Already here, the break in 1 hour will be a very good sign to go for low equity. If we ever maintain this level, there is a good chance of having an accumulation to start again and seek equity at the top. So we have our two zones which are important. And besides, let's talk about important areas. That's exactly where we are in terms of the total market cap. total market cap, where we see that we have really reached a key zone in which we have an order block. We have imbalance, and we see that we have price work, which is taking place. And what is interesting to see is that generally we always have liquidity transfer phases. That is to say, we pass liquidity from BTC to Ethereum to altcoins. It's something which is quite common in bull running. In any case, which we have already seen, once again, we do not forget that past performances do not predict future performances, so this implies that we cannot no longer rely solely on this fractality. On the other hand, what is interesting to note now is that here we have four curves. We have the dominance of BTC, which is at the top here in light yellow. We have the dominance of Ethereum. And here in light blue, we are going to have the dominance of all the cryptos, in which we remove all the cryptos excluding BTC, excluding Ethereum, and excluding stablecoin. So that basically gives us the altcoins. What is interesting to see is that since we started this little phase a few days ago, stabilization and lateralization at the level of the BTC, at the level of dominance, we have no movement. This implies that we are in a phase of lateralization and breathing in terms of the different prices and in terms of liquidity. We have not had any cash transfers for several days because we are once again waiting for a set of news. Don't forget that the upward movements that we may have had and the transfers of liquidity have been systematically linked to news. Around ETFs, even news rumors, and only that. So we always take a little step back from what is happening. Especially since at Kingfisher level, we see that we have the CVDs which are heading, as we predicted, towards the break of the bar. We are still relatively far away. We could very well have a very good acceleration which is beginning from now on, but we are slowly moving towards this low, in which we would in fact break and validate in fact a rupture of the CVD, therefore implied. A little stronger breathing and a class that would be much less aggressive. In any case, we are waiting for news of ETF validation. As long as we do not have that, we will not have an upward explosion. And even if we have an upward explosion, I remind you that we will certainly be in by the rumor, sell the news. So that means that when the news arrives, we will have a big false general word with a big candle which will come up, and then the equivalent or worse red, which is going to happen and which even risks breaking. I explained this to you in the various daily newspapers, and it is a bit of the pattern that I have been waiting for since the acceleration at Cirque, which we experienced a break with a narrative really focused on the possible validation of ETFs at the end of the year. And besides, I am asking myself the question. I think we will address it in the weekly. Is it yes or no? Is it not also a desire to have validation of ETFs before the end of the year? To simply gain performance? Because if we have a buy the rumor, sell the news, that implies that we will have the capacity to support the price throughout the rumor, what is happening, and to support the price, obviously, in the sellout party, and therefore the sell the rumor, sell the news, in which we will in fact have the bearish breakout. And therefore we will have a double performance which would be rather positive. I don't know, it's me who's thinking about that at the moment. It's up to you to tell me what you think in the comments, but in any case, I think it will be one of the topics of the weekly. We will end on the order flow with an order flow which is still rather coherent compared to what we have already experienced, an open interest which is in the process of sinking. We have the open interest which is in the process of to go down while we have a price which is going up. We have a divergence in the placement of the open internet. So that implies less and less leverage, therefore less and less interest. And therefore it is consistent with the CVD. It means less and less aggressiveness in terms of prices. This which is rather also consistent with what is happening, this form of weakening at the level of the price. And on this we will have to monitor, yes or no, we will have a form of reversal for have our pullback that we have been waiting for some time. In this case, it's starting to smell good. Unless we find ourselves once again with a new rumor saying that we have new analysts from Bloomberg who appear and who tell us that it will certainly be validated next week. It's very likely to get that, and at that point we have a big green candle again. I hope you liked this video, and if so, don't forget to leave me a like and a comment. It supports the work that I do, and it makes me, above all, very pleasant. And we'll meet up later at 13:30 to talk about Atom.